How prepared are you with your financial planning? How confident are you about your financial planning? Well, me, not one bit prepared or confident. Today, to discuss 5 finance mistakes when financial planning entrepreneurs make, is Wendy Brookhouse, founder of Black Star Wealth. She's a financial planner, pseudo CFO, money coach, and an expert in building wealth for entrepreneurs. Wendy, welcome back.
Oh, thanks for having me, Andre.
So, we were talking a little bit a few weeks ago, and you mentioned about there's 5 financial planning mistakes entrepreneurs do regularly. And I thought this would be a great conversation to have between me and you because I want to know more about it. I'm pretty sure I'm going to hit every 5 really damn good. And Before you get into that, do you want to give a little bit of background on yourself so you can demonstrate to people that you know your shit? Because there's not a lot of financial planners that I respect, and you're one of them. So give it a little spiel about yourself and then get right into your 5 mistakes if you don't mind.
Oh, my pleasure. So I have been in the financial planning business now for 18 years, Andre. And
Mm,
in the last few years, well, it's been all through the whole of time, it's been woven through. But I love working with entrepreneurs. I feel like my toolbox is bigger, the problems are a little bit more complex, so it gets a little bit more juice going and excitement when you're starting to come up with how am I going to help this entrepreneur achieve their financial goals. And so a couple years ago, what I realized too was, hey, we're doing your net worth statement, and your net worth statement being everything you own versus what you owe. And then they all had businesses. What's the value of your business? Where should we put that on the asset table? And nobody knew. And so that made me realize there's a big gap when it comes to financial planning for entrepreneurs is putting in what is the value of your business and helping them grow that out. So added that to the services we offer in terms of being able to put the whole picture together.
okay. Well, you want to just expand on more so no one was looking at the value of their business.
Hmm.
That kind of struck me as odd. And I don't understand why that feels odd. And I'm pretty sure a lot of listeners would think it feels odd, but should make sense. Do you want to elaborate on that a little more,
Sure,
please?
absolutely. I think it's a little bit mindset, Andre. A lot of us have been taught or we're socialized to think our business is our baby.
Right.
Our business is actually the most valuable asset we may ever own.
Yes.
And if we're not treating it carefully, if we're not intentionally and deliberately building the value of that asset, it may not come to fruition at the check you want to get in the end.
Okay, that makes a lot more sense now. And I haven't really considered my business as an asset until I started dealing with you a few years ago. And that's a whole different conversation. Actually, we talked about that in another podcast episode earlier, how to look at your value of your company to build it. But that's not what we're here today. We're here about the 5 mistakes entrepreneurs commonly make about financial planning. You want to list those off for us?
I will. So and then we'll dig into each one.
Yeah.
First one, lone wolfing it. Two, not looking at the whole picture. Three, not spending in the right places when it comes to your financial planning. Not understanding your mindset would be number four. And number five, end game awareness or lack thereof.
Yeah, that's an interesting one to me.
I know you're going to have fun when we get there. So why don't we dig into lone wolfing it, Andre? And
Yes.
um, so when I look at lone wolfing it, I feel like there has been so much in the media about taking control of your finances and managing your own money. And to some degree, I'm not going to disagree with you should understand how your money works, but this is another perfect instance of that stuff we've learned through strategic coach, Andre,
Right.
who not how, right? You need
Yep.
to know enough to make sure your professionals are toeing the line and doing the right stuff. But I think this is a classic case of someone who spends all their time building financial plans and looking at big pictures is different from running your business day to day. And so it's a different skill set. There's a lot of product awareness you need. And if it's hard to have the time to actually do that, the amount of time I spend in updating what are the tax rules around our planning? What are the new products coming out? How do they affect your tax today and tomorrow? All those pieces, having that expert on the side with you as opposed to trying to figure it all out yourself is really good.
Yeah,
So I
guilty.
think, yeah, and I think in your team, you need your financial planner, you need a very good strategic accountant, and a good lawyer. Now, let's talk about strategic accountant, if you don't mind. You okay?
Yeah, that makes us. Yeah, I want to talk about strategic accountant, the team. Now, the other thing too that just hit me with ADHD entrepreneurs, when we've kind of been molded to not trust anyone, it's going to be
Mhm.
very hard to not lone wolf it.
Yeah.
And I think that was one of the biggest things for me, especially around money. I'm really sensitive about the finances because I've been burnt in the past by either people didn't know what the hell they were doing
Yep.
or they were malicious. So I'm really sensitive around that, almost to a point of triggering.
Yeah.
But yeah, I just want the listeners to understand that, it's one of these things where we've relied on ourselves for our whole lives. Then we got to start letting that go and bring in these strategic accountants and a financial planner. So yeah, let me know, what's the difference between an accountant and a strategic accountant?
I like to break them down into tactical and strategic. Okay. So your
Ah,
tactical one is doing your taxes, making sure your books are all in line, all that stuff. They work with your bookkeeper, and they just get that stuff done on time and everything, but they may not necessarily be looking at your numbers with strategy in mind. And that's where a
okay.
strategic accountant comes in because they're the person I want to talk to about 3 moves down the road and what do I need to be setting up because these are my intentions.
So that's
And
part of the whole picture.
yeah, yeah, well,
Okay.
that's the next one, right?
Yeah.
Yeah, but that having that really solid team and like you said, Andre, you have to trust them. And you have to, it's in many cases, this is a super long-term relationship if done right, right?
Right.
Yeah.
Yes.
Yeah. And the same, and when we talk about strategy accountant, it's the same with your financial planner. Are you dealing with someone who is an investment advisor or a planner, right? There's a different nuance there because an investment person, they're just caring about your rates of return, which are good, but they may not be looking at everything in concurrence, and you may need to add that to your team as well.
Okay. I never really thought of those two as being separate. I just clumped them all into one.
They can show up in the same person, Andre, or but what I primarily see is people dealing with an investment advisor and thinking they have a financial plan when they actually have an investment plan.
Okay.
Yeah. Does that make
Nice.
sense?
Yep.
Okay, good. Now the next one is looking at the whole picture. So this is a little tough one, but I think when we're financial planning, I want you to break all the rules and put everything all together, right? So when we're looking at business and setting ourselves up, we're instructed very clearly, keep your personal life this way, keep your business life here, and the two will never cross. But in
Yeah.
terms of financial planning, I really think we need to mush them together again for a bit because let's look at what the purpose of the business is. It is to fund your personal life.
What?
The purpose of your business is to fund your business, your personal life.
That's the first time I've heard that from a financial planner's mouth or any actually, well, that's a whole to me, that's a whole new concept. I don't think that's really been taught or expected as
Right.
well.
But how are you paying your mortgage? It's coming from how you pay yourself from your business.
Right.
How well your business does will impact how the quality of your personal life as well,
Well, it
right?
makes sense. Might as well
Yep,
enjoy life at the same time.
absolutely, right? So when we pull it all back together, then when we mush it together a little bit, we want to make sure that we're looking at the picture of today. What
Mm-hmm.
do I need from my business to fund my life today and to fund my planning for my life after work, right? And I say it
Yeah.
that way. I don't want to call it retirement. It could be a hard stop, it could be a slow down, but really it's when you are ready to close that door or even slow down that you have enough money in the various places to do that. And
Okay.
so when we're looking at the big picture, we're also looking at, hey, are you building a business that you're going to sell? Or is this business strictly to fund everything and build up all the assets so that you can have enough money for today and tomorrow and for life after work? Because it can change how you are going to grow your business if that is the intent, right? Because if you are building a business strictly to fund it, to fund afterlife, how much are you investing to grow that business versus if I'm investing to grow it to sell it?
That makes sense. If I got a future plan of X amount of dollars, or I want to do something specific, or like say, like a lot of us are at the stage where a lot of kids are going to college, university, you want to fund that. That helps us bring us into better present decision making if we already have an outline and a plan of
Yes.
what's going on. And I think for the ADHD brain, that makes it a little more real. We can see it a lot better if we
Mm,
can break that down to now
yeah.
and what to do now. Cool.
And it also, there are studies that show the more that you have this plan and you understand how everything affects everything, it greatly reduces the stress around money and the anxiety around money. And so,
And the overwhelm. I think
yeah,
that's the other thing too. A lot
exactly.
of people are overwhelmed with it, not knowing there's too many things going on or what the hell's happening down the future, especially when you don't trust the people who's giving you that information.
Exactly. Yeah, this is not a good situation if you're in it. So hopefully you can find somebody. But the idea is to, when we pull it all together, then we pull it all apart again, right? So
Right.
that and we have clear, distinct things that we're trying to do with that. And because what we want to think about too is when we're starting to planning for life after work, we have to look at are we building a whole bunch of assets or are we building something that will become an income stream in retirement? And that can the taxation can be different. So we just have to keep tax, our friends at the IRS and CRA in mind when we're putting these plans together. Yes,
Yeah.
they're our
Yeah.
partners our entire life, man.
Yeah, I'm going through that right now. Something I said a while back is going to either nail me now in taxes or nail me later. Either way, I'm getting nailed to the wall.
Thank you very much, right? So, yeah, so looking at the whole picture, getting that real sense of it so that you understand the interrelationships. Where are you building the assets for retirement? Where are you building emergency funds and everything? And knowing how they impact the big picture is very, very important. So that's where that comes.
Okay.
Ready? Number 3, spending in the right places.
And time.
And I'm focusing this on really yeah, that's right. It's about time and money, right?
Yeah.
So let's look at the picture of financial planning. In the world that I live in, a lot of times what people will do is, hey, if you move all your assets over to me, I'll do a plan for you,
Mm-hmm.
right?
Yeah. And then I'm nailed with the transfer fees.
So there's all kinds of things that happen there, right? One is how much are you paying that advisor overall? Two, um, that means that you have to take a big swing at that. Like you have to give them control of your money before they're going to do the plan,
Right.
right? So in my mind, there's a bunch of levels there. So instead of doing it that way, what if you wrote a check for your financial plan? Find the best planner, put the plan together, and then decide, do you want to stay with your current advisor with the assets, or do you want a different one based
Right.
on that piece, right? So, and then the other piece is looking at different um, advisors and understanding the total fees you're paying for your assets under management. A lot of them now have percentages. It's all a percentage of the assets under management. So here's where I have the little bit of a cognitive dissonance is, hey, if I have $500,000 with somebody and the advisor's making 1%, let's say. So that's $5,000 the advisor gets the check for. Hey, that might be great. But then they grow their money to $2 million or the money gets up to 2 million or 1 million even, and you're paying 10,000 or 20,000 for that same service. Has the service doubled in value? How does
No.
that work, right?
Yeah.
From the point of view of what are you getting for that money? And in some cases, I suspect you're getting some good services, and in other cases, you may be overpaying. So you may be underpaying for your planning, but overpaying for your assets, is what I think. So making sure that you're spending the pile of money you have to allocate towards financial planning overall becomes part of the picture.
So is this what you're referring to as spending in the right places? Is kind of like the fees with the financial advisors and planners and even accountants?
And making sure that it all comes together in the right way.
Okay.
Because
Okay.
also, I think that we're afraid sometimes to bring the strategic accountant in because we're like, oh my God, they're like $500, $600 an hour.
Mm-hmm.
But what you save and the insight they have because they've seen this 5 million times before, that $600 might be the best 600 you've ever spent for that 1 hour.
Yeah, as long as they save me over $600 in
Yep.
taxes or fees or
Yeah.
whatnot.
And the right financial plan will save you taxes either today or in the long run. And they will also making sure you're not making little mistakes about where you put the money, especially if your end game is to think about selling your business. You want to be thinking all the way along about, okay, if I sell, where's the cash? How am I making sure I'm eligible for the best tax
Mhm.
rate on my sales proceeds, etc. So you have a lot of work there to do.
But that's bit of a challenge too, to find a financial advisor slash planner or planner that as actually will reduce their fee or percentage to benefit the person who's investing the money,
Oh, I know.
right?
Yeah.
Now, but I just want to clarify a little thing too for the listeners here. We're talking about three, spending in the right places. My head went immediately to spending money corporately.
Yes.
And I forgot that we were actually talking about financial planning, not in your business. So I just want that clarity for everyone because I got lost myself. So I just want to make sure. Number three, spending in the right places has to do with your financial advisors, planners, accountants, so anything around
Yeah.
planning for the future. Okay,
Yeah.
cool.
Yeah. And I love the idea of also spending time in the right places because I
Yeah.
feel like a lot of times um, people think they have a long, long time, that this doesn't, I can get to this later. They spend more time planning their vacation than their financial future, etc. So when it looks at it as like, how do you break it down so that you're spending a few hours a year and maybe upfront a little bit more, but making sure that you're on the right track, seeing, hey, this is the plan I put together last year. How am I tracking? Am I hitting the numbers I thought I was going to hit? How have things changed in my business? How have things changed personally? And making sure those all still work together.
And something you just said there makes a lot of sense. And you actually planned for a family vacation.
Hmm.
I've never done that with my financial planning. And I think it's a really good thing to
Yes.
consider is that it's not financial planning is not only about your business. It's also about, like you said earlier, spending on your personal
Right.
life.
Yeah.
So keep that in mind, listeners.
Absolutely. So yeah, make sure you're spending your time and your money in the right places when it comes to your financial planning. This does not have to be onerous.
No,
This does not have to be something that you ignore, which kind of leads us into number 4, Andre, which is understanding your money mindset.
that's a huge one.
I know, right? So we won't be able to unpack it all, but I'd just like to say, um, for your listeners and for yourself, Andre, were you taught about money in school?
No,
Right. Did you learn about money at home? In
not
an all
directly,
ver
but
Yes,
indirectly.
yes.
Indirectly. But by
That,
the atmosphere, the way my parents talked about it, the
yeah,
big lesson I recall is for every hour you work, that's what you're worth. And if you benefit from someone else's work and you don't do anything, then you're scum. So we
right.
had to work hourly to earn that money and not more.
And you have to work hard for that money,
Yeah.
Andre. God forbid you don't work hard.
Yeah. So that's more hours, 60
Yeah,
hours a
yeah,
week.
yeah.
Yeah.
And to some degree, it seems like there might have even been a cap on how much per hour your time was
Yes.
worth,
Yeah.
right? And so when we're entrepreneurs and we're raised in that environment, maybe the person up the street, oh my God, rich people are bad.
Yeah.
Because one. And so we took all that information in, we accepted it as truth as children. And now what we don't realize is it's affecting everything going forward. So understanding some of the messaging that you got when you were growing up is so key. I've probably said it before, Andre, but ask yourself 3 questions. 1, what is your first memory of money? 2, what is something your parents did with money that you would like to copy? And 3, something your parents did that you never want to do. If you work yourself through those, you're starting to surface some of the habits and patterns you have
Mm-hmm.
that you may not even be aware of, so that you can start.
So I would mind before we go on to the next one, couple things. Everyone must learn how to do their own income tax. That's the one thing I do really appreciate from my father was he forced me to do my own income tax every year as a student by hand. That got me an understanding where the government was hosing me right, left, and center. But understanding how all that, when they announce a credit, hey, I'm going to income tax credit. Well, that doesn't mean crap because I already saw the math. So
Yeah.
that was one of them. And the other one, what was that last question? And what I don't.
What I don't
Yeah.
like, what I do like, and unpacking those pieces.
Yeah. And the first one, what I don't like is that hourly concept. You
Mm-hmm.
know, some people, yeah, working hourly, that's what your value, you're worth. A lot of people that works well. But for an entrepreneur, especially a visionary entrepreneur, we create value and we provide services or employees to help us with providing that value. And that's been a tough one for me. So a couple other mindsets too is poor me.
Mm-hmm.
Never make enough money because we're going to be poor or we're going to lose it all. So we got to stockpile it, or
Mm-hmm.
having a frugal mindset, just always thinking that we have to save, and not really enjoy yourself, or actually causes a lot of improper spending in different areas. There's a
Yeah,
couple of things to ponder.
absolutely. And when I think about it, I think that there's this continuum of overspending versus saving everything, right? So if you're overspending and you're going into debt, really, when tomorrow comes, it might suck. But if you are saving, well, we're not guaranteed tomorrow. So you
Right.
are taking away from today for tomorrow, which may not come. So there's this fine line that we want to start figuring out with folks is how do we balance having a great life today with planning for a good life tomorrow?
And one thing I want to add before we get on to number 5 here, because we're running a bit out of time, unfortunately,
Okay.
is the mindset of, like you said earlier, oh, the person down the street are rich and all blah, 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 blah. That actually sabotages our growth in a business. I'm
Yes.
still struggling through that. I didn't want to get too wealthy, but it
Yeah.
was a subconscious limitation and restriction. So this mindset thing is a huge one. And like I said, like Wendy said, is there's too much to unpack here because just in themselves. So
Yeah.
can you list those 3 questions one more time and then let's push on
One,
to the end
what is
game?
your first memory of money? Two, what is something your parents did with money you liked and something that your parents did that they didn't like? And I just have one thing, but if you want to make lists, go make lists.
Yeah.
And
Yeah.
and then look at the ones and how that's showing up in your life and is it still serving you?
Yeah. That's the big question.
Yeah.
Cool.
Yeah. So that's big. Also, our mind also takes shortcuts around money and financial decisions, so it's important to understand those as well.
Nice.
Okay.
Number
Number
5.
5, coming at you live. End game awareness. Okay? End
Yep.
game awareness. Now, I know, Andre, that with time blindness that you have, end game is super hard sometimes for you and for others who have that same kind of focus on today. And
Yeah.
you know what
Try not understanding the future or making the future visible, or it's not
yeah,
really real in the ADHD brain. Yeah.
yeah. So how do we do that? Well, that's a tough one and it's when you are talking to an advisor, making sure they understand that and adjust how they present information to you so that you can absorb it better is a great part of evaluating for your team. But end game awareness is important. Why? Because in the words, are you jogging or training, right?
Ooh.
Right. So if I'm going out for a jog, I'm just going out. I'm kind of like, oh, I'll turn here, I'll do whatever, right? Like it's not really planned. If I'm training, and I did do a half marathon, Andre, years ago, and I will tell you, when you're training, you have it laid out. This week I'm going to do this run, this run, this run. Next week I'm doing this. It's all laid out. How is that any different to how we should be approaching our financial lives and in terms of what we're trying to achieve? It almost feels like it's a byproduct right now, but how do we make it part of what we're looking at on a regular?
Right.
Yeah.
So what kind of end game awareness? So what is there different types of end games?
Well, I think there could be an end game for your business. It could be an end game for, hey, I've left this earth. What do I want left behind? Right? What do I want my legacy to be from a point of view of the money I leave behind? If I am had a business that was a thought leader business, have I made the work so that my impact can continue and my legacy continues? after I'm not running the business anymore. So there's lots of different ways to look at end game. But I think that it's starting to think that, hey, what is my end game with result to my business I want? What do I want my life to be after I'm done working? What do I want what I want to leave behind when all said and done?
Okay. And lack thereof, and that resonates a lot with me because I remember when I started well, actually, I remember that from high school or even younger. It's like, everyone asking you're supposed to make your 5-year plan, blah, blah, blah. And I kept saying, well, I don't have any because I want tomorrow to be a surprise.
Oh,
Was
nice.
kind of
Yeah.
I think it was my justification. It's
Yeah.
internally to overcome the time blindness.
Answer though.
But a lot of it, I think, with the time blindness, because the time frame of an ADHD entrepreneur is now or not now.
Right.
And if you want to talk to me about the not now, if I'm in the middle of a now, then it gets a little more difficult. But we've had conversations where you're talking 20, 30 years down the road, and then my head just goes, oh,
Boom.
that's like 100,000 years. I'll worry about it down there when I get down there. And the problem is when that time comes up and nothing's been happening, that's the challenge.
Yes.
But I think if we change the conversation to what the end game is,
Yeah.
um, if you want, I don't know, $2 million for your retirement fund, and we got that's by a certain date. This is now basically is what do we need to do now to make that happen and have that as an ultimate goal.
Yes.
And that helps. What do we need to do now to get that end game? And the other thing is if we don't have that end game, because you had in your notes there lack thereof, and then we don't know where we're working towards, and then it's like a shotgun spray effect. Whatever interests me right now, I'll go here, go there.
Boom,
But if we
boom,
got that
boom.
plan in place, it's like my shit list and the focus maximizer. It just helps us regain our thing and decide on what money and where to spend and how
Right.
to save and spend
And
less. Like your one number solution, I think is really good. I only got X amount of dollars per week for whatever.
yep.
And then we put an app and it reminds us that, we're spending, or, oh, wait, maybe not this week.
Well, the end game also gives you the ultimate opportunity filter. Is
Yeah.
this getting me closer or not closer? Right? Whereas if you don't have an end game in mind, anything can be a good option. So I think it gives you that ultimate ability to do that. That doesn't mean you can't shift your end game over time, Andre, but it does give you that can become something that you review on a periodic basis, but you can evaluate your opportunities and the things you're doing about whether it's getting you closer or not.
Well, you just said there, we can always change the plan. And I
Yes.
think that's a mindset that a lot of people have is once the plan is set, that's all we do, like a stupid business plan,
No.
right? No, that's just for the banks. There's nothing to do with how you would execute it. But knowing that we can change the plan at any time, depending on the circumstances or, our tastes or dreams change, right?
And life happens.
Well, yeah, life happens. But I think also giving us that permission, because a lot of the ADHD entrepreneurs, we've been rigid in once we make a decision, that's all we're going to do, because that's self-protection mechanism. Then we get less attacks or quote unquote attacks. So yeah, having that permission to adjust a plan down the road is a huge one. And
These are
that's
not
very
meant to
good.
be put on the shelf. They're meant to be looked at on the regular and adjusted.
Yeah. And I really like that. Know your end game so you can know what to do today, now, the now, about the not now.
Yeah.
I really like how you said the purpose of your business is so simple, but I know a lot of entrepreneurs don't understand this or learned it, or it's not told a lot. Purpose of your business to pay for your personal life, no other reason. And to take that, I think we need to take that mindset, because then we can enjoy ourselves a little more, do more experiences versus getting stuff or saving it for a rainy day. And the other thing I really liked is, um, accountants, tactical or strategic. Tactical just basically are number crunchers, saves you taxes, or just does your taxes. Well, your strategic accountant also has to do with planning in the future as well, about what actions to take. The one I really got a good advice from accountant was like, hey, you got too much cash in your checking accounts. Now it's time to invest. Things I just don't think of. And then how to look at and plan in a certain way that you're not dealing with income taxes or any type of corporate taxes at any other time. Because either way, the more taxes we pay, that means the more money we make.
Not
But
always a bad thing,
it's
but
not a bad thing. Well, when you get that switch, an old accountant told me a long time ago, you want to pay more taxes. I said, you're a crazy old Right. And he goes, no, that means you make more money. I was like, oh shit, that makes sense. So I want to pay more tax. Then he said, but my job is to minimize that amount that you pay.
Yes.
Right.
Yeah.
So we want to screw the government. We don't want you to pay taxes. A lot of people have that mindset. Whatever I can do, spend more, blah, 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 so I can reduce the taxes to the government. But in the end, that's not the right mindset. So, because now after I saw that, it's like, okay, then let's go, go, go. Let's make more revenue, more money, and have a profit.
Yeah.
So I think that's really cool. So, any last words, Wendy, before we take off here?
It's never too late to get started, Andre. I think that's one of those things that pick up the phone, find the right team, get started. This is one of the top things that should be, if you don't have this in place, it should be almost one of your number one priorities,
Yeah.
2025 or and beyond.
Well, that's a great takeaway for the listeners to take. It's never too late. Don't be hard on yourself that you didn't figure this out before, or you don't, you figure so. Start talking to yourself that you suck, you don't know what you're doing, and you don't want to show that you didn't know. Just say, hey, need help. Learn from those mistakes, and we can start now, because I do have learned with time is if you kind of ignore a bank account for 6 months to 8 months and you just continually put X amount of dollars in, and then all of a sudden you go, whoa, there's a shitload of money here. Right. But for some reason, our brain says, that's not a lot. You're not going to just, let's learn from these 5 mistakes. Let's move forward. And the question I have for you is, will you now fix your finance mistakes? Find your strategic account, find your strategic financial planner who will work with your advisor if it's someone else, and your accountant as well. So, Wendy, thanks again for joining us.
Thanks for having me, Andre.
And to you, the listener, thanks again for learning with me. We'll talk to you soon. Thank you.